All right, hey everybody, this is John, and welcome to the free video. I was going to start off talking about AMC. AMC had earnings. Of course, we had the big move here, and then they had earnings last night, and they kept emphasizing that we're going to be taking payments in Bitcoin next year. And the way they were saying is like, okay, this is going to, and then everybody got excited. They're going to destroy shorts. Yay, yay, yay. What happened? The stock gaps up like $3 and ends up down on the day. I call this jump the shark. And if you guys are familiar with the term, the show Happy Days with the Fonz was a long-running show, and at some point the writers were running out of ideas, and then they had Fonzie on water skis, and there was a white shark or whatever, and he jumped it. And after that, the show just steadily went downhill, and it was done. Jump the shark. And I think AMC just jumped the shark. I mean, the fact that they got excited about that, they emphasized that, reminds me back in the late 90s when companies were coming out saying, we are now a .com, and, that would jump the price up. Well, now that, the idea that Bitcoin is not really doing anything, again, I would almost be tempted here. I mean, I know it's got high short interest. I'm not a big fan of shorting high short interest stocks, but selling call credit spreads on this is starting to look appealing. Don't send me hate mail. I'm just telling you what I'm seeing. From there, Coin had earnings today, okay? And they beat, and the stock jumped up to 284, and then it was down, and now it's around 270 bucks. We sold call credit spreads on this in the money, so we'd have to get below 265 for that to work. But again, we're seeing here, and people will say, oh my gosh, they beat earnings, why aren't they rallying? Because it's priced in. All this stuff's already priced in. So you got to really have an incredible upside surprise, to really, really, really take advantage of that. And it just doesn't happen. I mean, there's a reason it's called guidance. The companies want to get good at guidance. They don't want to surprise Wall Street too much. They don't want to disappoint them too much. They want to be in line with guidance. And so oftentimes that's priced in before earnings. And that's why, especially this quarter, we've seen a lot of stocks be flat to down after earnings. All right, last but not least, the NASDAQ. So if you guys remember last August, 2020, August was the best month to trade last year. It was amazing. Just you already had a strong weekly trend. You can see here the weekly trend was super high. In fact, right here, it was kind of like almost like a blow off, kind of a top. And where is August? Was it right there? April, May. I'm gonna have to drag this back here. So August. Yeah. So last year in August, we had this kind of choppy July, and this chop kind of went on till about August, probably about right now, frankly, August 10th or so. And then there was just this explosion, and it was the best trading month of my life. Tesla, Amazon, etc., etc. I mean, it was great. And then we were actually looking for a down move in September, and we capitalized that. And it's like, there's two things I want to point out here. First, when you get big moves like this, and this move here was from that level to there, happened, over the course of about 2.5 months. Typically, then, if it gets too extreme, it's going to give it all up in much less time. And if we go back, all the way from here. So keep in mind that test of the 89 period moving average is coming, right? And so the question is that about what's going to happen now? Because if we look at the stock market now, there's a squeeze just like there was here. So are we about to have this kind of blow off move? And I don't think we are. Now, I'm the first one to raise my hand and say, okay, maybe I'm wrong on that, but I don't think we are. I think, in fact, we may get a little bit of a pop here, but because we're seeing divergences in the Russell mid-cap 400, we're seeing divergences in transports, and most importantly, the NASDAQ and the spiders have been making new all-time highs with the least amount of participation as possible, meaning that there's a record amount of stocks trading below their 50-period moving average, okay? I don't think that ultimately this is going to end well. And maybe all it is a flush to the 89, but the main point here is that we're overdue for it. We had one here. This is the time of the year when it's going to happen, and maybe we're going to wait till September. But I would just say over the next week or so, it's okay to be cautious. It's okay to be in cash. It's okay to wait. But I do think we're going to get this test at 89. Maybe in a perfect world, what happens is we do kind of grind higher into next week's monthly expiration, and then we start the process, or maybe we start in September. Just be cautious. You don't want all your hard-earned gains over the course of this year to be pissed away in the course of 3 weeks of selling, which I think we're going to get here pretty soon. All right? Hope it helps. You guys have a good one, and we'll see you at the next update.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me